Thinking about investing but feel paralyzed by fear or confusion? You're not alone. In this video, I'll walk you through how to make your first investment with confidence, step by step. It's time to turn hesitation into action. Like, subscribe, and let's take that first smart move together. Making your first investment can feel like stepping into uncharted territory. The fear of the unknown, the risk of losing money, and the overwhelming array of choices often paralyze people into inaction. But here's the truth. Everyone starts somewhere, and every seasoned investor once felt that same uncertainty. The key is to take the first step strategically, with preparation and clarity, so fear doesn't hold you back from growing your wealth. Understand why your investing fear loses its grip when you have a reason to face it. Before diving into the world of investing, define your why. Are you investing for retirement, a future home, your child's education, or to achieve financial freedom? Setting a goal gives you direction and motivation. It becomes the emotional anchor that helps you stay focused during market fluctuations. When you invest with purpose, you're more likely to stay committed and less likely to panic when things don't go perfectly. Educate yourself. Knowledge beats fear. Many people are scared of investing simply because they don't understand it. But knowledge transforms fear into confidence. Start by learning the basics. What are stocks, bonds, mutual funds, ETFs? How does the market work? What is compound interest? You don't need a finance degree, just a foundational understanding. Free resources abound, from podcasts and blogs to beginner-friendly investment books and video tutorials. The more familiar the terms and processes become, the more you'll trust yourself to make informed decisions. Check your financial readiness before you invest. You must ensure your financial foundation is strong. Do you have high-interest debt, like credit cards? If so, it's wise to pay those off first. Do you have an emergency fund with at least 3 to 6 months of expenses saved? If not, build that safety net. Investing without an emergency fund can backfire if you're forced to sell your investments during a market dip to cover unexpected costs. A strong foundation reduces the need to worry and gives you a buffer to handle life's surprises without derailing your investment journey. Start small. You don't need thousands. One of the biggest myths is that you need a lot of money to start investing. In reality, you can begin with as little as $5 or $10. Many investment platforms allow fractional shares, meaning you can own a portion of a stock or fund. Starting small not only removes the financial pressure but also helps you overcome psychological resistance. When you invest a manageable amount, you're less afraid of making mistakes. Think of it as paying tuition to learn a skill that will benefit you for the rest of your life. Choose a simple investment strategy. Complicated strategies often create confusion and fear. For beginners, the best approach is to keep it simple and steady. Consider low-cost index funds or ETFs, exchange-traded funds. These funds are inherently diversified, meaning your money is spread across multiple companies or sectors, reducing your overall risk. They're also passively managed, which means fewer fees and less stress. Another beginner-friendly option is using a robo-advisor, which automates the process based on your goals and risk profile. Understand risk and your tolerance for it. Investment always involves some degree of risk, and that's okay. The market will go up and down, it's inevitable. What matters is how you respond. Assess your personal risk tolerance. If a 10% drop in value would cause you to panic, you may want to start with a more conservative investment mix. On the other hand, if you can handle temporary losses in exchange for higher long-term returns, a growth-focused portfolio might be appropriate. There are online quizzes to help you gauge your risk profile. Knowing where you stand emotionally is as important as the numbers. Pick the right platform. With your goals, education, and budget in place, the next step is choosing a platform. Today, there are countless apps and websites that make investing user-friendly. Look for platforms with low or no fees, good customer support, and educational resources. Some top beginner platforms include Robinhood, Fidelity, Vanguard, and Betterment. Many offer automated investing options and easy tracking tools. A good platform reduces friction and makes the investment process smooth and even enjoyable. Invest for the long term, not quick wins. Fear often stems from expecting quick results. People want instant returns and get scared when the market dips. But investing isn't gambling, it's a long-term strategy. The stock market has always had ups and downs, but historically it trends upward over time. Avoid checking your investments every day. Instead, set your strategy and review your progress quarterly or biannually. The magic of compounding happens over time, not overnight. Long-term focus keeps fear in check and aligns your actions with your goals. Automate your investments. One powerful way to remove fear and indecision is by automating your investing. Set up automatic contributions every month, just like a bill. This not only ensures consistency but also helps you benefit from dollar-cost averaging, buying more when prices are low and less when they're high. Automation also removes emotion from the equation. You're not constantly questioning whether it's the right time to invest, you're simply sticking to your plan. Keep learning and adjusting. The world of investing is vast, and there's always more to learn. As you become more confident, you might explore new areas like individual stocks, real estate investing, or even cryptocurrency. But move slowly. Don't rush into riskier investments until you have a strong grasp of the basics and your current portfolio is well established. Continuing education keeps your fear at bay and helps you evolve as an investor. Know that mistakes are part of the journey. Even the best investors make mistakes. You might pick a fund that underperforms, or invest a little too aggressively. That's okay. Mistakes are not failures, they are lessons. What matters is that you stay in the game, keep learning, and don't let one setback scare you away from future opportunities. Investing is a skill that improves over time, and your early experiences, good or bad, are valuable building blocks. Surround yourself with encouragement. Lastly, your mindset is heavily influenced by the surrounding voices. Follow financial experts who promote long-term thinking and education. Join online communities of beginner investors where you can ask questions and see that others share your concerns. Positive reinforcement builds confidence and keeps fear in perspective. Remember, every investor starts with a first step. What matters is taking it. If this helped ease your fear around investing, like the video, subscribe for more beginner-friendly finance tips, and comment below with your next money move. Your financial journey starts now.